Okay, welcome back to another installment of updating the portfolio update here for the Student Investment Fund. Um, this video, I'm hoping to cover exactly just how to update the portfolio once we've made trades, and how to incorporate those into the analytics, and some little troubleshooting things that we've run into here over the last year using this. So, without further ado, I believe I'm should just be sharing. There we go. So you should be able to see my screen here with the portfolio update. Here's the landscape update, what you'll be presenting when we show up. And let's just make sure we've got all of that. We should be showing March 22nd, but we're doing every 2 weeks, 3 months. Anyway, fun. So here's our portfolio update. In the last video, I ended off just talking about this little academic year to date. The problem with this, or the reason why this is pulling up as not applicable, is if you look at the formula right here, it's saying like, hey, if today is in this data set, show it, and if not, don't. Well, that's exactly what's going on. Today is April 21st, and it's not in the data set because today's a week. This is a weekend. So, and this is all showing weekdays. So anyway, just fun little updates there. So when you want to update the portfolio and you want to add some trades, you want to add assets and remove assets, you're going to basically just like come in here to the portfolio tab, or the raw data tab. We're going to put in a ticker. So let's put in Tesla. They've been in a bit of a slump recently, so let's just throw them in. You'll see Cap IQ is doing its magic here and working on us. You'll see that it is saying 0. That's because we don't have any shares yet. So we've typed in Tesla. It's doing the math for us. It's looking everything up. Let's just say it's part of a, or you know what? Let's do Ford and let's do GM. And let's just call this strategy, we'll call it auto. Call this an auto industry tab or strategy. Let's see what they're trading all at right now. Tesla is trading at 147.05. Let's say we have 29 shares of Tesla. So you can see, boom, right there, it's doing the math for us of exactly how much that position is worth in Tesla. We're going to say that they are, we'll throw down their start dates. Let's just say it was March 28th, 2024. Right, and this will come in handy. This will come in here in just a second. But we're going to put this down as consumer discretionary. One thing to note is you're going to see that all of these are, you have to keep all of these exact as they are, just for the data to be able to pull correctly. Everything's using HLOOKUPs, VLOOKUPs. If you vary from the spelling or even have like a space where there isn't a space in the original data set, you're going to throw it off. That is part of the reason why we have this sitting over here. Our initial idea with this geek sector breakdown table was to be able to do exactly that, use the VLOOKUP, HLOOKUP, XLOOKUP to be able to find exactly, to automate that process of being able to identify the industry and the sector. However, the CapIQ plugin uses a different backend data set for the industry than this geek sector for whatever reason. And so it doesn't match up exactly. So for this too, we can do this real quick. So we've got, our auto industry, we can probably throw down consumer discretionary, find auto parts and equipment, boom, right there. It's consumer discretionary. That fits well enough. You can just copy this and then paste that in. Nice and easy. And it'll go in nice. So let's throw that in there, right, too. So we've adopted all of these in March 28th, 2024. So, and let's say, what's Ford's? Ford is currently trading at $12.14. And again, this isn't going to be the most accurate because this is what they're trading at right now, and we're saying that we bought them on March. But this is just to highlight the point. And then let's see what GM's trading at, which is 42.37. All right, and let's say we bought 150 shares of Ford and 80 shares of GM. All right. So all in all, it's as of a year ago, this position would have been worth about $9,100. However, we didn't buy this on April 21st of 2023. We bought it on March 28th of 2024. So you'll notice that there are a couple of these columns where data is blank. And that's because it's using this function, which is also available in the how-to tab for you just to be able to copy nice and easy over right here. So you can also just copy it from this. So what's basically going on is it's checking to see if it's basically doing a validation check to see if this date is this date, and if they match, then it will show you the price on that date. So we're going to copy this over, paste it there, and now it's empty. We're going to drag that down to the entire column, and you'll see on March 28th, this new position has started. So this will end up showing adjusting our Davidson fund just quite a bit, up to about $60,000. So this position now is worth about $9,500, right? So over a year we've made $400. That's nice, I guess, on these. However, we need to for us to be able to buy something, we got to be able to sell something, right? So we're going to use this function, which is again doing something similar in the sense that it's doing that date validation for us, but it's also including a new element, a new variable of the end date, right? And so basically it's saying, similar to before of if this date is less than or equal to this date, perfect, great, show it, right? However, if it is greater than or equal to this date, don't show it, right? Is essentially what it's doing. And so that's why you'll see some of these kind of tripping out and wigging out. So let's say we were sitting at how much did we spend? Oh, 10,000. So our strategy is down. That's fantastic. We love losing money. Let's say we sold these two. Which ones are these? K and P. So ZTS and Lulu. All right. So now what we're going to do is we're going to copy this same function right here, paste it here into ZTS and Lulu. Copy that, sorry. Right. So you'll see that, so since there's nothing here, it's going to show up blank. And so if we just throw in 3/28, 2024, not 2004. It's in a while. We've got that, and it was ZTS that we were selling as well. So you should see this one is also going to repopulate for us. Perfect. So you can drag those down. And boom, you'll see that Davidson has now updated because it's reflecting the sale of those two assets prior or on the day before 3/28/2024, right? So the other things to notice too is this tab or these calculations are going to auto-populate for us as well. The longer we hold the tab, the more information that's going to be available, or the longer that we hold the position, the more information is going to be available. So you have your 1 week return and you have your 1 month return. Again, since it hasn't been a month, we're not going to get the 1 month, but we have a 1 week. We also have all of our other information, our running returns, our weights of the overall fund, and our max drawdown for each of these. So that essentially is how you update the raw data tab. Once you have updated the raw data tab, we need to go over to our calcs tab. This is going to be probably where the majority of the like human errors are going to be, which is going to be a pain in the butt. However, you gotta roll with it. So now we need to add our new stocks to this table, right? And since we just added them right here, everything is just going to auto populate for us. And it is going to be looking for everything over here in the it's trying to find the industry, the sub industry that we're using for these. This isn't the biggest deal. However, it's always good to be able to have at least your industry tab or your sector tab. So once we're done with that, once we've done that, we can look in here too, and it should reflect both ZTS and Lulu being out of the fund. See, so it's Lulu's out of the fund and ZTS is no longer in the fund. So that's something that you'll notice as you go through this. You can just put we've usually just done largest to smallest here, and it makes it nice and easy to be able to see all the information here. So that's one thing. Then what we need to do is we need to add our new strategy. So we have our auto strategy that we're pulling in here. And one of the big things that is, like I said, is going to cause a little bit of a pain is you need to add it to this large table. So you're going to see every single one of these is going to have the name of a strategy that's currently in the fund. So here we're going to put in auto. Actually, we need to put in correctly. So auto, and then what you can do is what this is doing essentially is that it's doing a lookup and a summation of all of the information of all of the positions for that strategy on the specific date. So you can just copy this here. We'll paste that there. There we go. Right. So it's looking that up, and it's looking through the entire raw data tab to be able to find that total position. Right. So we can drag that down. And around March, we should start seeing the information. So there we go. So we see all this information start pulling in around March. What this is doing is it's just getting the standard deviation of the daily returns that we're going to be getting here. We're just going to drag that back over right here. We can just copy this over. And essentially what this is doing is just so long as it's as long as there's a return, a daily return, do the math, and if not, it's just pulling a zero. So we've got about a standard deviation of about 1.63%, which is pretty nice. So now that we've added that, we come back here to our strategy tracker and we pull this info right here. So this is what's going to be kind of interesting that you're going to have to work with. And this is why it takes a little bit longer to update after we've added strategies. And this is one of those things that I didn't automate at the time that you're going to have to automate if you're savvy enough. So really what we're doing is we're just taking this, copying it down, and you're going to notice this is referring to the averages of all of this, and it's doing the calcs K19. So it's trying to find this. It's doing the return for us. So a lot of this is doing just fine. So so really what it's doing is it's looking at the raw data tab, and it's searching for the basically weighted average of all of these returns for our entire added portfolio that we just, or the added strategy we just threw in. So now we go back to the tab, to this. All right, we can pull this down. And again, this is trying to pull our weighted average for all of these. And so you notice this is pulling up as a zero. That's because we didn't drag any of this over. So we can pull all this stuff over. It'll pull that little refresh thing for you, and bang. So now we can see, the betas for each of these companies as we're looking at them. And now we have our weighted average beta or the weighted beta for the strategy. Then, we'll just pull all of these down. So you'll see we have an alpha of negative 12.4%. This strategy, or this calculation, as I mentioned in the previous video, is just your alpha, which is your return minus the expected return of your CAPM. And that's why it's important to update your risk-free rate consistently and every week. You'll notice we do have this extra term, and so this is an annualizing formula that I've created. Oh, we'll just do that. Whatever. Uh-oh. Oh my goodness. There we go. And then we just go back. So basically what it's doing is it has this annualizing formula, which is the date of today, which is referring to the start date over here, or today minus the start date, right? And it's multiplying it by 0.7 and then dividing that entire thing by 252. The reason why we're doing this is we're taking the number of days between now and when the strategy was implemented and multiplying it by 0.7, which if you look at it, 252, or there's about 70% of the overall full calendar year is trading days, which is that 252 figure. And so what we're doing is we're saying, all right, take the serial number for today, subtract it by the serial number for when we started at, multiply it by 70% so that we can get the expected total, number of trading days that we've had in that time frame, and then divide that by 252 to give us the kind of percentage of the entire year. And so that's how we've been calculating our alpha. You'll also notice that we've got our Sharpe ratio, our weights, our standard deviation here, and our max drawdown. These are all, some of these, as you'll notice, are referring to info from the raw data tab. Let's just pulling that over nice and easy. However, you'll notice we have a couple of these that are basically the same exact things as the strategy that we just copied from. So you're going to need to look into this a little bit more, right? And so the reason why why these are similar is because you're looking at our Sharpe ratio, which is dependent on our standard deviation. So, but you'll notice too that our standard deviation is exactly the same. Well, that's because it's using a formula, or it's an absolute reference, and then just multiplying the square root of 252 again for the reasons I mentioned before. But this absolute reference is BF 424. So we'll go over here to BF, drop down to 424, and you'll notice it's referring to the financials one. This is one of the things again where it's like we could put like an offset match function or an X lookup to be able to refer to this exactly. But so far we've found, I think it's easier personally just for right now to do this. I also haven't had the time to be able to sit down and actually like crank out that formula to be updated for the entire thing. So you can just move this over. It's nice and easy enough, and that will update your Sharpe ratio. So you'll see that's basically just taking the annualization of our standard, or the standard deviation figure right there for us, and sitting that there. One thing that you'll notice is that this is supposed to be in largest to smallest format. It is, or at least it was. And then we have obviously some changes in all of our the strategies here as they've changed in their performance. Again, once you do change this, you're going to need to do exactly what I just did, where you have to change and find the standard deviation for that strategy in that table down here off to the bottom. So just keep that in mind as you're doing that every single week. As you're going through doing everything. So anyway, so then you have the rest of our kind of analytics down here, just basic averages of everything else. We should also, so I mean, that's really about it in terms of adding and subtracting, or making trades in the fund, in the strategy tracker. You'll notice too. Let's see. This is basically just referring to this table right over here. So one thing I think we talked about a while ago is we basically just needed to refresh this page and refresh this page. Because we've seen in the past, you'll see, for example, share buybacks is actually at a negative 7.10%, and it's displaying as a positive 7.1% right here. And so one thing I think we talked about was it had to do with the custom formatting here. And so we can show this nice and easy. All of these will just show us percentages out to the one decimal place. So those are things to keep in mind. We'll move our Sharpe ratio down to just 1. So anyway, those are just the little things that you'll notice as you're working through the update. We're going to save this too real quick. Other little troubleshooting things that we've noticed as we've been going on is, for example, let's say we put in 329 by accident right here instead of March 28th. Oops. For these, we're now going to have an overlap of the strategies that we've had, or when we made the trades for our auto strategy trade, right? And so now you're going to see in the landscape update, there would be just like a little weird kind of like uptick in the strategy, or in the fund. So if we could look at March 28th and 29th, right? We're pretty much, let's see. Here we go. March 20th and 29th. 28th, we were up $10,000. Well, that's because, again, we're doubling up on this strategy. This isn't highlighted super well. Let's see. You know what? Let's just say we had 290 and 800 shares of these, right? And so you'd see all of a sudden we had a massive spike right here, right? That we then go down about $10,000. So those are just little things to keep in mind as you're updating the template. Is that if there's something that's going on, it's a little funky here in the update, where you see a large spike and then a drop, that's most likely the reason why, is you have two cells, or your sell and your buy date are just overlapping just by the day. So just make sure that that's incorporated. That's correct. Other little things that we've seen, I'm trying to remember, is just the weird little nuance things of just making sure that you have the correct cells being referenced to up here. So yeah, all in all, that is the strategy, the portfolio update. Like I've said, we use this a lot, obviously, for our weekly updates with the portfolio, just being able to understand how the fund is operating. Another good way to be able to use the portfolio update too is to understand exactly how the fund is changing after we make a trade, right? So when you're ready to do your strategy presentation, your your stock pick presentation, you want to analyze exactly what the effects of that are going to be on the current fund as it's sitting. That's a great way to. This is a great way to be able to estimate what those effects are going to be. So yeah, this has been video 2 of 2 of how to update the portfolio update. Those of you on the tech team, my best advice is to be familiar with Googling things. That's pretty much how I built this over the year. Being very familiar with Google, trying to understand how the functions operate and work together. There's a cheat sheet online by S&P that includes all of the different CapIQ plugins for Excel. So if you're curious about how the syntax of a function works, it's exactly where I've been pulling everything from, which I think we might download and make available just through SIF resources. So if it's not available, it's through SIF, through the Canvas page, it's absolutely available online. Yeah, best of luck. Oh, the best.